New data shows job growth is surging in the cryptocurrency field. According to a new LinkedIn report, crypto-related job postings in the U.S. soared 395% between 2020 and 2021. That's not a wrong number, 395%. Job growth in the industry far outpaced the wider tech industry, which saw a 98% jump in postings during the same time. Cryptocurrency is also influencing a new chapter in internet history. It's called Web3, a decentralized version of the internet based on blockchain technology. For more, I want to bring in Darren Fonda. He's a crypto and finance editor for Barron's. Darren, first of all, this gets so complex. A lot of people don't even know what cryptocurrency is, crypto-backed innovations. While this is all fascinating to think about and talk about, tell us, what is now Web3?
So Web3 is really kind of a lot of marketing at the moment. The idea is that it'll be more of a distributed internet that will involve everything from online gaming to virtual platforms for social interaction, for work, for all kinds of electronic commerce. The notion is the idea that it'll be based on blockchain technology, on distributed ledgers, and rather than having giant companies like Amazon control the data or data storage, it'll be distributed very widely. So again, right now it's more of kind of a pipe dream for Silicon Valley, but you're seeing a lot of companies investing heavily in it, expecting it to kind of be a next generation internet.
Could you almost look at it like the cell phone industry when you talk about 4G versus 5G and that kind of thing?
Yeah, I think 5G is more incremental over 4G. It's basically just faster speeds for downloading video. I think Web3 is considered to be more of a next generation that'll be more revolutionary in the sense that it's going to enable more applications, more kinds of decentralized finance, again, more uses for gaming, for commerce, for trading. There's a whole range of applications that are expected to be developed on this new kind of blockchain decentralized version of the web.
It's so interesting to talk about. I think for the regular person, it seems so far out there. But for investors, as you were saying, they're certainly taking notice of Web3, pouring tons of money into crypto projects as a result. Now, according to research company PitchBook, venture capitalists invested a record $30 billion in crypto and blockchain companies in 2021. Which projects are getting the most money at this point?
So a lot of it is going to developing financial services for crypto trading, for crypto custody, for exchanges, for exchange-traded products, basically broadening the crypto economy to mainstream investors, to institutional investors, to anybody who kind of wants to grab or try to gain exposure to a little bit of what is expected to be, a very large piece of the digital economy going forward. There's also a lot of mining infrastructure that's attracting venture capital. There are decentralized finance platforms for trading, for borrowing and lending crypto. And a burgeoning new field is NFTs, or non-fungible tokens, which are basically digital collectibles that can be used for art, for video, for music, for paying song owners or artists little fractions based on usage of their works. The NFT market exploded in 2021. It's expected to continue growing. You're seeing companies like Coinbase that plan to develop NFT platforms. NFTs in general are attracting a lot of venture capital as well.
Yeah, it seems like every time you read an article about cryptocurrency, now everyone is talking about NFTs. Investor funds, it looks like, too, aiding the job boom in the crypto industry. What types of positions are companies hiring for? Because it seems like everybody's looking for a new job.
Yes, and they pay extremely well. I think the average blockchain developer is posting at about $150,000 now, which is well above the median salary in the United States. A lot of it is software engineering, software development, building hardware, software services, accounting. A lot of it is technically oriented. But if you have a background in software development or computer engineering, computer science, you're probably in hot demand right now for a lot of these blockchain companies crypto mining firms, anybody who's trying to kind of grab a piece of this digital economy.
So a Luddite like me need not apply. You actually need to know what you're doing here.
I suppose I probably fall into that Luddite category as well. I'm not a programmer. I'm not a tech guy, but I know that they are in high demand.
Well, there is a growing call for more women to enter the largely male-dominated world of crypto. A December report found less than 5%, it looks like, of crypto entrepreneurs are female. What can be done, do you think, to encourage more women to enter the industry?
You know, I think it's the same thing that can be done to encourage more women to enter any other technical fields, which is encouraging STEM, encouraging science, technology, education, math education at a young age. Encouraging women to take hard science courses in universities and in high schools. And I think the industry probably needs to do a bit of work as well to encourage more women to apply for positions and to, make the tech industry, which has generally been historically male-dominated, to be a bit more friendly to women. So I think there's a lot that can be done. There are some women in pretty high positions in crypto companies, but there definitely needs to be more.
I almost feel like I have some friends who are looking to get involved. It's almost like word of mouth. You have to start getting more women together to talk about these things too. I wonder, along the lines of so many industries, you see growth so fast in one place. Is there a danger of a crypto bubble?
Well, I mean, a lot of economists would say that we are in a bubble right now. We've had an enormous amount of liquidity pumped into financial markets over the last few years, especially since the pandemic. The money supply has just expanded colossally with trillions of dollars floating around. That money has to go somewhere. It has been going into tech, and as an extension of tech, it's been going into crypto and blockchain companies. And some would argue that it's really inflated valuations and inflated the values of a lot of coins. So there are coins and tokens that you can say have very legitimate use cases. And then there's a lot of fly-by-night ones that do not, that people are just pumping out there, hoping to make a quick buck on, and then they're withdrawing their support for the coins and the tokens. So I'm sure there is a lot of speculation going on. People are making money. People are also losing money. This is what you get when you have a financial market that's been inflated, by a lot of central bank policies. And we may be nearing the end of that right now, with the Fed and other central banks planning to scale back on asset purchases, planning to raise interest rates a little bit in the next coming year. We've seen the tech stocks market take a few hits lately. Cryptos are not far off from that. They're fairly well correlated to tech stocks right now, and we may see some more pressure in that market as well as some of the liquidity comes out of the market.
It's so interesting to try to keep track of. You see that a company like Tesla is now taking cryptocurrency as currency, but then you have some celebrities being sued because of scams with cryptocurrency. So we're still trying to sort all of this out, it seems like. Darren Fonda, thank you so much for joining us. We appreciate it.
Thank you very much.